Welcome back to the new episode of Partnership Account. Today we'll discuss how do we treat goodwill. So goodwill is basically an intangible asset, and it is paid when we purchase another business, or it is earned when company earns its reputation in the market. So we can say it is a price that we pay for the brand name. So there are two types of goodwill we discussed earlier: purchase goodwill and inherent goodwill. Purchase goodwill are those goodwill which we pay to acquire another business. If Microsoft is purchasing Apple and if they are using Apple's brand name after purchasing it, and the amount that they pay to get those brand name is called purchase goodwill. Whereas the inherent goodwill is a customer base, it was earned by the company through its reputation, which is subjective in nature. So that's why most of the time inherent goodwill will not be recorded in partnership. So here is the adjustment for inherent goodwill in partnership. And this is basically done when there is a admission or the retirement of partner. So I'll show you exactly how we can do the adjustment for inherent goodwill and purchase goodwill. So here is the question. Jack and Kelly are in partnership. They share profit and losses in the ratio 2:5 respectively. Capital account for Jack and Jelly 33,000 and 71,000 respectively. It says the partners decided to admit Lisa as a partner with effect from 1st July 2018. Lisa invested 120,000 on her admission, and goodwill was valued 52,500. No goodwill account was to be maintained in partnership book. And it also says in the future profit and losses would be shared in the ratio 2:3, 5:3. Okay. So if you see here, there are two things that is happening. One is Lisa is admitted as a partner, and in her admission she brought 120,000 in partnership. Okay, before she admitted in the partnership, Jack and Kelly were sharing the profit and losses in the ratio 2:5, and after we admit Lisa in partnership, the profit sharing ratio is 2:5:3. So when we enter into partnership, these are the following two journal entries needs to be, okay, these are the two following journal entry needs to be recorded. There is no goodwill account to be maintained in the books of accounts. So first journal entry is goodwill account debited to capital account. This should be in all profit sharing ratio. If there are two partners, then there will be two capitals name. If there are three partners, then there will be three partners name in capitals place, and it will be given, or it will be distributed to those three partners in all profit sharing ratio. And the next entry is capital account debited to goodwill account. This will be done in new profit sharing ratio here. Okay, so if there are three partners, or we had a two partner, now new partner is coming up, then we'll have three partners name appeared here. I'll show you exactly how we can do this. So here I made a format where the journal entry is given goodwill account debited to capital account and capital account debited to goodwill account. So this capital account will be replaced by partner's name. Okay, so we can have in all profit sharing ratio here Jack and Kelly. Let me quickly write it down, this Jack account, and now here we can have three partners account, which is account. I have partners capital account prepared here. So as per this question, it says that they have a balancing figure. Okay, they have a balancing figure, and their amount is 33,000 and 77,000. Now Lisa entered into partnership and she brought in capital. So journal entry is bank account debited to capital account, and she brought 120,000 in the partnership. Then we have to pass this first journal entry here, goodwill account debited to Jack and to Kelly. So we need to write down in Jack's and Kelly account goodwill account. Okay, so we wrote goodwill, and the amount of goodwill is 52,500. Yeah, and this would be shared between Jack and Kelly in all profit sharing ratio, which is 2:5. So altogether 7. So now if I find out what is 52,500 divided by 7, then I get 750. So for Jack, I would get 750 into 2 sevens, which is 50,000, 15,000, and for Kelly it is 750 into, okay, which is 37,500. Now the same goodwill account needs to be written with this journal entry, because we said that we will not keep goodwill account. So it says that Jack account debited, Callie's account debited, Lisa's account debited to goodwill account. So here I will write down to goodwill account and amount. Okay. So this time it would be shared in the profit sharing ratio 2:5:3. So all together. So we still have 52,500 as goodwill. Now if we divide this goodwill with 10, then this is the amount. I made a wrong statement here. It's divided by, okay. So for now, for Jack, the amount of goodwill is times 2 and 10,500. For Kelly, amount of goodwill is times 5, and for Lisa, the amount of goodwill is this times 10,750. So these are the new. So we'll write down goodwill here, and so now the process is very simple. We will balance this account. First write down the total on the debit side, okay, and then find out what is my balancing figure. So I can say my balancing figure is this amount, and my total on the debit side and credit side is, and then with the help of balancing figure I write down my balance BD figure. Very simple. So now as you can see that goodwill is written in capital account wise. One is on the debit side and another one is on the credit side. So the total of this goodwill is always 52,500. So when you open goodwill account, there will be no balance CD or balance BD left. If you look at here, Jack is getting 15,000 here, okay, because capital account is credited, so his balance is increasing, and Kelly is getting 37,500, okay, but Lisa is not getting anything here. Now on this side, Jack is paying 10,500. Okay, he received 15,000, but he's paying only 10,500. Similarly, Cali received 37,500 but paid only 26,250. Whereas Lisa did not receive anything and then she is paying 15,750. So we can say that Lisa is paying 15,750, and this 15,750 is given to Jack and Kelly in their old profit sharing ratio, which is 2:5. But you don't need to show that those calculations. If there a question comes in your exam where you have to do or adjustment of goodwill account in partnership, then this is how we do it. You write goodwill on the credit side in old profit sharing ratio and goodwill on the debit side in new profit sharing ratio, and you're done. Thank you so much for tuning in, and hope this helps you to understand the adjustment. Have a nice day, and I'll see you in our next video. Stay tuned.